Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting here from the monthly time frame, we can see how the market is currently testing very strong monthly demand and support. In fact, from here, this previous rejection to the upside was created. Again, here the market tested its zone and rejected it to the upside. And at the moment, we had one other test of this area from which we could expect a rejection higher, which is in fact exactly what the market is currently giving us, and from which we could expect more potential bullish continuation. We can also notice, if we look at the actual macro pattern that the market is printing here, that we actually have the creation of a little bit of a weird inverted head and shoulders. In fact, if we look at the pattern, we can see down, up, lower, low, equal high, correction, and now continuation higher. This is an inverted head and shoulders because we have the left shoulder here, the head here, and the right shoulder here, clearly showing that buyers are now once again in control, from which we could expect more bullish continuation. Now, also keep in mind that the creation of an inverted head and shoulders and also a regular head and shoulders is simply a fake breakout. It can be brought back by simplifying it to a fake breakout because we have a support level which was broken to the downside and then broke back above. So the head is simply a fake breakout. And then you have the retest of the previous support, which once again holds as support. And then there is that weird name of an inverted head and shoulders, but this is simply a fake breakout. So when you hear people speaking about head and shoulders, remember that is simply a fake breakout if you break it down to the actual structure. Going down on the weekly time frame, what do we have? Now, from a weekly perspective, we can notice how also here structure has been broken. We can see how the previous high here, which was this level here, which was acting as previous resistance all across this zone that the market was testing and rejecting to the downside, now has been broken to the upside. So all this previous resistance is now turned support here. And what we could expect in a situation like this is a potential retest of this previous resistance turned support before then getting rejected to the upside. Going down on the daily time frame, what do we have? Now, from a daily perspective, I did speak about NZDUSD just a few days ago. After this impulse, I explained all the reasons for which from here we could expect this move to the upside, which is exactly what the market just gave us. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. And what we can notice is that in creating this massive move to the upside, all daily structure has now been broken to the upside. And since we have an impulse, if we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse leg, which shows us how we have a 0.32 and 50% retracements, which are currently lining up exactly with this previous level of supply and resistance from which all this move to the downside was created, which is now turned support here. So in this level, we have both the Fibonacci levels and the structure support. This creates confluence of support at this zone, which we could expect this market to potentially test and then to reject to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market, and we check the data precisely for the NZD, we can see that with the last report, we shifted from having a negative net positioning with minus 831 net positions to now having a positive net positioning with plus 830 net positions. This shows how we went from having more shorts than longs from an institutional perspective to now having more longs than shorts, therefore making NZDUSD very strong. Now, why do I say NZDUSD and why are institutions actually longing NZDUSD? Because keep in mind that all currencies on the spot are traded against the USD. So If you're checking the data for the NZD, this is already NZDUSD. So clearly, institutions are shifting to the bullish side, therefore adding longs. This means that if the market here will create this correction to this confluence of support area, this increases the probabilities that we will see more institutional longing inside of a confluence of support area, further increasing the probabilities that we could see a reversal higher away from this zone. So if we get a correction to the zone, how we could be approaching a potential move higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. So if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program, you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that directly from here, there is the timer, and you can see that there is still time to join before the offer expires and price goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. At least you're supposed to go and check it out at transparentfxtrading.com. The link is also in description. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.